Okay, just started our recording again. I lost a little bit at the start of it. So we're looking at here Bitcoin. It sort of led the charge with the big crash that stocks also did on sort of late last week. Everything sort of started to look a little bit dodgy. I think the main sort of thing people are waiting for a rate cut. Like the markets have just been in anticipation all this year of the Federal Reserve to start cutting interest rates, and it's just been really coming really slow. And so we were just sort of talking before about how this correction that we say stocks too, that had a big correction, 7.5% I measured before from the top. So the Federal Reserve, from their point of view, and looking to starting to cut interest rates, will actually be reasonably happy about this, because so this is USD/JPY, sorry, it's not the stock market. The Federal Reserve will be reasonably happy about this, because the last thing they want to do when they cut rates is create another huge asset bubble. So the fact that stocks are down at the moment a little bit, close to 10%, they'll actually be much more comfortable for their September meeting or whatever it is, I think, coming up, where they were talking about that rate cut. So we've also seen the 10-year, the yields for US 10 years fell off with that too, because this is obviously with future expectations that rates will be coming down. The market's sort of seen that already. They're like, okay, stocks have fallen off. Now the Federal Reserve is going to be happy to cut, and so the 10-year rates dropped off quite quickly. Just last week we were actually talking. Rates are sort of hovering around here, how there's sort of like quite a nice opportunity in fixed income. While it's sort of hovering around there, you could jump in and then sort of reasonably expect that any trouble that comes up in the market, your bond portfolio would rally. And so that's exactly what happened here. Like, as the rate came off, your bonds would have gone up in value heaps, so that would have been really cool for you. But Bitcoin, as we were just saying before, that was just as volatile. That behaved just like a risk asset, like we would expect it to. It came down 30%, which is a big drop, and is currently 20% down now too. But another risk asset like this, so Japanese stock market, sort of known to be one of the higher risk, higher return sort of equity markets around the world. It's been doing really well. It was up 40% in 23. It's up quite a bit for 24 already. Well, it was up, say, 30%. Well, it was doing really, really well for the year, but sort of wiped out all the 24's gains now and back at the start. But you're talking similar numbers to what Bitcoin did. So behaving very much like a risk asset. What's that? 30%, nearly 30% down, and now currently 20% down. What we're sort of getting to before is that everyone wants Bitcoin to be a really nice diversification asset. They want it to go the opposite way that the market goes. But unfortunately, it went exactly the same way the market went this time. So the other one too was Ethereum. That went even further, I think. That got really, really hammered. I think Ethereum had some good news recently. So there was news about a spot ETF coming out. 40% down, and it's still 27. So the market sort of got spooked, but it does look like they've found a bit of a floor. Everyone's worried about Monday, what was going to happen, whether everything was just going to keep falling, keep going, but seems to, most of them, like if we go through some of the big ones, like what's Meta doing? I mean, that one really didn't even get that much of a fright to start with. That came back pretty quickly. I think, say, Microsoft, that might have... that looks more like the stock market. That's gone more like the index. That's down a hell of a lot. Wow, from its high. No, they're about it's 15%, it's just like the way that the chart looked. So it's come down a little bit more than the market. Apple, I think less, strange, more. I don't know if you heard the news, Warren Buffett, Berkshire Hathaway, they divested their share in Apple. They had like quite a bit of equity in Apple that they sold. And I think it took a bit of a hit off that. But again, like when you're looking at an individual stock, always look like what did the market do at the same time, because sometimes you might look at a stock and think, oh my god, what's happening to that company, but then if you realize the whole index is sort of down quite a bit, it's sometimes it's not really that company. We're talking about Nvidia before too. That's we talked about that last week. It's been a really exciting stock. We were looking at it somewhere up here around 120 or whatever, but yeah, it's come down, and so it really sort of raises the question of potential buying opportunities in the market at the moment at these levels, whether it is worth to jump in to some of these opportunities that may not ever sort of be down at these levels for a while. So yeah, that's a sort of sort of a individual decision for everyone. But we talked a lot about the big story in the markets last week being AI and how Nvidia sort of led the charge with that. But basically, the story behind Nvidia is sort of the story behind the whole market, because the biggest companies in the market index, say Apple, Meta, Microsoft, like those ones that we were looking at, they all use Nvidia's chips for their own AI. And essentially the reason why investors are so excited about Nvidia is for that reason, that the biggest companies in the S&P 500 rely on Nvidia, and the biggest trend essentially underlying all this growth in the stock market index is AI. Has been the story of AI, that basically AI is going to come into these businesses, be integrated into their operations, and will save them money. They'll make their operations more efficient, faster. So essentially their profitability is higher, their earnings are higher, and therefore they're worth the valuations. Like that's kind of the story at the moment in the market, sort of around AI. But something that we could talk about this week too, because we're sort of talking about that from like the bullish point of view, saying that AI is potentially going to keep driving the markets higher. We can have instead a more sort of conservative look at what AI could potentially be heading towards by looking at Tesla. Elon Musk really wants everyone to value Tesla as an AI company, not as a car company, because as we were just saying before, AI is the big story in the markets. But I think the reality sort of come to bite him, and people are starting to value it more like a automotive company, like it really is, like it sells cars. And electric vehicles were super popular in terms of everyone's expectations of where the sales figures were going to go, but it seems to be that EV sales all around the world have come off, that people aren't as excited about pure electric vehicles as everyone sort of thought they were, and it seems more like hybrids are becoming more popular as new car purchase. I think there's various things like convenience with the mileage and stuff that people just don't really like about electrics at the moment. So Tesla has actually been hammered from the peaky highs in 22. Sort of slowly come down. It actually had last quarter, I think they had a really good earnings announcement, and people got excited about it, and it rallied back up to 260. It might have been just their sales, I think, were better than expected or something. But yeah, that's been a real dog of a stock, that one. It's just slowly wandering its way down. So yeah, although AI is sort of the big story driving growth in the markets, like it needs to be sort of approached with caution too. So Tesla is in many regards an AI company, like Elon Musk wants us to value it as, but also it's what are you using that AI for? What's the commercial application and the potential with it? Because like the likes of a Microsoft has near sort of infinite ability to incorporate AI because of the platforms that they already have. So Microsoft already has Windows, already has this whole ecosystem of software that it can start to plug AI into. So the AI story for Microsoft is really strong, therefore its performance has been really strong. Similarly for Meta, obviously has the data of billions and billions of people, literally, and lately it's been really strong. So it did have a real went through a route following 23. So 22 the market was down anyway. The stock market went down a little bit in 22, but Meta were really excited about the metaverse, and Mark Zuckerberg was spending billions and billions of dollars on the metaverse. And at some point, everyone was like, is this really going to make money? And the investors decided it wasn't, and so the stock was getting beat. And then Zuckerberg came out basically and announced just scrapping the metaverse, focusing on ad revenue, focusing on making Facebook profitable. So what does it do? Ripped from $130, like nearly quadrupled, tripled. And so again, this is another company with a really strong AI story. Like they have the platform, the users, the data to be able to make good commercial use of the AI technology. So therefore their story is really strong. But yeah, like the likes of Nvidia, behind all of that, they're the company that's driving a lot of that AI development. So again, their stock is really strong. Yeah. So Tesla, that's sort of just a bit of a lesson to avoid bubbles essentially. But I think a lot of Tesla share value is like to do with Elon Musk. A lot of people just support Tesla as a company because they support him. And I guess there's always that risk there too, like that he does something stupid and drags the whole company down with him, or he leaves or something like that. And I don't know if a lot of people know that Elon Musk himself's actually taken more in compensation from Tesla than it's ever earned in revenue. Like, so his compensation something like north of 50 billion, like in terms of what he's got out of them from selling stock and all of that sort of stuff. And I think Tesla's total revenue is still under 100 billion in its whole life. So yeah, these founders, sometimes
I brought you some interested students.
So in the middle of
interesting students. So this is, they just came from our lecture on a variety of topics. So these are all Bloomberg terminals.
You're here for the questions, mate.
Can you do? I don't know. Are you able to do like this a quick? Or are you talking with these?
So we're doing. So every Wednesday we've got our market catch-up chat thing here, where we have we just like sort of go over what's been happening in the market. So yeah, we put it up on
currencies right now. These guys are quite interested in currencies, actually.
Are you?
Yeah.
Are you? Oh, so have you been currency trading stuff? Cool.
Yeah.
So I've been USD JPY harder. That was me. What
Sure.
Yeah, did really well out of that. So this big run up in 22 was sort of like 220% return for the year. Last year through this, not too bad. It was about 30%, but 24 has been horrible for momentum trading. So last week we talked a bit more about it. The Japanese central bank, they were sort of trying to protect their currency. It was getting all the way up to 162. So they were, I think, dumping FX reserves. They were doing like any sort of trick in the book to stop it marching higher. And just in the last couple of weeks, it had this huge correction. So we're back down to 145, which is somewhere around where it sort of sat for all of that time. But at the same time, the Nikkei, yeah, we were just looking at that before. So that was down 30% at the bottom and came down 20. But so if you invested in that by selling US dollars essentially your net investment in the Nikkei won't be too bad because of that crazy FX spike.
Yeah. But you know what they say? They say the future is always incredibly clear when you look in the rearview mirror.
Yeah, and this is what we're doing here. We're telling stories in hindsight about.
So this is what you can kind of get involved with. You come to Massey, so this they have an investment club. You can sit around with amazing gentlemen like this and learn all about chit chat.
And the Bloombergs in particular too. That's where all our market data comes from.
See you guys.
Thanks, mate. Yeah, so the Bloomberg terminals, there's 3 of them there, and they're basically like industry standard data for investments. Like if you're trading currency, it's maybe not as exciting as this for someone trading stocks, because you can pick through all the company's earnings, the balance sheet, all of that sort of stuff really well, and they're in their supply chains too. Yeah. Like, so you can jump into a stock, see who their main customers are, who the main suppliers are. There's tons and tons of data on the Bloombergs in particular, and once you're enrolled, you can take all 3 of the Bloomberg courses for free through Massey. So there's a ESG course, which is like that's super popular at the moment. Sustainability and environment, all that obviously. So it looks real good on your CV with employers when you have that sort of thing on there. There's the finance fundamentals too. So first years have really, really enjoyed that because it gives you more practical sort of explanation about finance, like what IPOs are and, all of these sorts of things. And then there's the more intermediate level BMC course. But also if you do, say, when you get to second year, there's stock report assignments. So you'll just pick a bunch of stocks and you do a valuation on them. And those are really, really useful too. Those are Bloomberg terminals. It's maybe next week for the chat thing, I'll start the screen share up on a Bloomberg terminal, and we'll give everyone a bit of a heads up on that too. So we chuck them up on YouTube. I'll give you our info. That's our there's all our socials and stuff on the back. The YouTube also has the name on it we work on. Yeah. Yes, what's your...
Cool.
Sweet, mate.
Yes, thank you.
Yeah, you're welcome. Yeah, welcome.
Cool. Yes.
See you. Shot for coming in. Yes, what was your question?
Yeah, just a couple of points. Just at the very start when you're going that this market correction is happening. What
yeah.
Was the immediate trigger for that? Was this...
So there was no, I never actually really got to it. So there was actually a jobs report in the US actually come out saying that unemployment finally ticked up. So that was just a signal that essentially the US economy is actually slowing. So for all of this time that this Federal Reserve's been trying to essentially put the brakes on the economy to get rid of the inflation just by having the rates jacked up, stubbornly the US jobs market has remained tight. Essentially there's high demand for workers and not enough workers, and so that pushes wages higher, which is essentially the Federal Reserve's biggest fear, is a wage price inflation spiral, essentially where the employers are forced to pay more money to get workers, and when inflation is going on in the economy, if workers start to get a lot more money, then they start spending it and it can drive it out of control. So that was, I think, the main story, essentially, that, okay, the economy's slowing, all of that. But really, in terms of how negative that is for the stock market, is where it's a bit mixed, in my opinion, because the fact that that a rate cut is coming, that the Federal Reserve's worried about now, is essentially can see that the economy is slowing down. They've mainly got inflation under control. Now they actually have a reasonable excuse to go and cut rates. Yeah, whereas if the stock market hadn't fallen 10%, where's the rationale to start cutting the rates? Because if they start cutting the rates, the stock market's just going to rampage higher and higher and higher. Crypto's going to rampage higher.
You see this as just a temporary downturn?
Yeah, I do. From the information that I'm acting on, essentially, if there's nothing that I understand more about that, it's really just this case that the economy's like, well, if we look at it in terms of interest rates, you can see the story much more clearly of what's happening, and we'll zoom right out. You could get sort of a done something screwy on. Just scroll up to get to daily. It's not letting me. Something. I'll zoom this out. Oh yeah. Oh no, what's going on? Oh man. I think, yeah, we shouldn't have lost the recording. We're still on the tab. Here we go. Yeah, so if we go into interest rates, let's make a story about interest rates. We'll look on the long term, and you start to get like a picture of sort of what's going on right now. If you zoom right out, see the big long term story basically. So we're going way back, 48. I don't actually know TradingView had data all that fast, so that's pretty good. 10 year. So ever since the late 80s, there's the 87 market crash. Where are we? 87 here. So since then, interest rates been slowly coming down over time. There's actually been a steady period of rate decline for basically since 87 to 2020. So it's been a very, very long protracted rate sort of easing cycle. And then what happened basically, once they kept them low after the COVID crash, because we were all panicking at that stage, didn't know what was going to happen. But yeah, what happened in 21, towards the end of 21, in the US, inflation noticeably started to tick up. So that's when they jumped on the brakes by raising interest rates. And we've gotten through, basically, it seems like that rate cycle to the point now where if you see inflation essentially being under control now, which sort of seems like central banks sort of have a bit of that idea, that inflation is under control, that they can start cutting rates. We've just been through this really short reversal of a 30-year trend in the markets, essentially. So for the last 30 years, rates were steadily coming down. We've been through a short period of steady rate increases. So essentially the market's pivoted into this different environment and now is in the progress, essentially, of pivoting back out of it. So what would be, I guess, the highest likelihood outcome is that rates will continue to sort of meander downwards from here. And we may go into like a miniature version, basically, of that rate cycle that we've been in for so long, that basically that's what we were talking about, saying that there was that opportunity in bonds, was to be able to get in sort of around here and know that rates are probably going to slowly wander, back down to somewhere in these levels that we've been quite accustomed to them since 08. We've been used to quite low rates. So you'd have to imagine that they're probably going to start to wander back down again. So yeah, in a way,
the share market will gradually wander.
Yeah, exactly. Yeah.
Just one other thing you mentioned about EVs.
EVs, yeah.
You mentioned that its sales are slowing.
Or below expectations.
Yeah, because I'm actually invested in lithium. The expectation was there that growth in EVs is going to drive this.
And lithium mining.
It's not going well at the moment. Lithium prices are down. But I'm getting different narratives about this. People are saying EVs are slowing, where actually the growth rate's slowing. The actual EVs aren't actually slowing.
Yeah.
And I just wondered how.
And that's a good point.
About that narrative. It's still popular. I get the impression it's still going to.
Yeah.
Even if not shoot up, it's going to be meandering up.
Yeah, I think that's
rather than it's going to go down. Everyone's going to hybrids. I don't know.
No. I wasn't sort of trying to sort of make that implication. It's just because of the sort of excitement that we had around AI. That's what that EV sort of caught some of that enthusiasm. But so where you're coming from with, I'm guessing, the thesis on investments in, like you're talking about, lithium. So I know in Australia, in Western Australia, there's many mining projects for rare earth minerals and stuff that are coming on board, because there has been a post-COVID-19 another trend of supply chain nearshoring and friendshoring, they call it, essentially, because China had built a very dominant position in rare earth mining and processing and all of that sort of thing. And so the US, in a short amount of time, sort of realised that it needed to sort of quickly catch up. And we're seeing other geopolitical things that sort of mean that this trend isn't going to be dying away. Like you're seeing the global sort of conflict, and China supporting Russia, somewhat in that conflict. And so the Western world and business and stuff is starting to see, okay, this country maybe isn't supporting our values in the way that we want to see the thing. So other countries are benefiting, like Australia, for example, and stuff. Friendlier countries, Taiwan, Philippines, Thailand, like these other countries that the US is very friendly with, doing well from this, and China losing essentially slowly some of the market share. So that's a very strong thesis in investing, is this friendshoring, nearshoring, and the fact that the US actually has to massively catch up in lithium, all of these other rare earth minerals that they aren't mining and producing. So that's a very big trend in investing, yeah.
Because the narrative I'm getting is that the price of lithium is actually dropping because of the Chinese manipulation of the prices. I don't know if that's
interesting, yeah.
Absolutely true, or just a mixture of price manipulation and drop off in EV sales.
Yeah, and also like those other there's many avenues of electrification and stuff beyond EVs too that's still going to be high demand.
Lithium battery technology is still, and demand for lithium still growing, even if EVs don't go stratospheric like that.
Yeah, there's also lots of questions around and from what I've heard, it's reasonably positive in terms of like next gen battery technology and stuff, and like that lithium will still be I think they're going to phase out cobalt. There's going to be a way that the new generation batteries are going to be able to be made without cobalt, and cobalt is one of the most visible, horrible things because of mining in Africa. And being mined in disadvantaged communities and stuff like that. I think lithium technology is reasonably safe in terms of like the future of batteries. So it's an interesting one.
Just one thing about Tesla, you're going on that he wants to market as an AI. How does AI fit into what Tesla's doing?
He wants to value it. So,
I'm not really up to
well,
it's not so much AI incorporating into EVs somehow.
It's the driverless cars, yeah. That's the big thing. So, for a vehicle to autonomously operate, it essentially needs the cutting edge and beyond of computational power to be able to sort of, in the time frames needed to be able to make decisions and stuff like that. Basically, Tesla has to be sort of leading the world in high performance computing, AI integration, and all of that sort of thing. So a driverless car is kind of like the pinnacle of AI challenges that we have at the moment, and it's in a way looking sort of unachievable. I think Elon Musk promised us many, even years ago, that there would potentially be like a robo-taxi network where essentially we wouldn't even need our own vehicles. We'd just have an app and a Tesla would just roll up and take us everywhere. But the difficulty, and I understand as a software engineer, AI sort of enthusiast, I can sort of appreciate the challenge of trying to, the domain problems of driving a car. There's just trillions upon trillions of possibilities of situations that can unfold, and the computer has to, in that split second, classify its environment and make a decision. So if it doesn't know exactly what the environment is saying, if it can see something on the side of the road and it's not sure if it's a tree or a person or something, all the computer really can do is slam the brakes on and say, error, we don't know what to do. So I see that as being a pretty difficult problem, like a very, very difficult problem that we may be further away from solving. And I think some of that may be reflected in Tesla's price. Like Elon Musk makes big promises, does big things, big impressive things too, like his Star Factory in Texas, where they're making the next generation, all those rockets for, I think the commercial deployment of that is really Starlink V2, like the new generation of Starlink that will be at a higher Earth orbit, kind of, and will have better coverage and will just work all around the world or whatever. So that's what they're mass producing those new rockets for. It's pretty cool. They got like an actual production line set up for them. Like that's insane. But yeah, he's a strange character, that man. But he's doing some interesting stuff. I can't take that away from him. Yeah. Cool. Got any questions?
So this is what you do every week?
Yeah, we're going to do this every Wednesday. I've just started this semester. So I was flat.
Yeah, I'm actually a staff member, but
cool.
I've seen their emails come out.
Sweet.
Really sort of got around to them.
Yeah. You'll be able to do all the courses for free too, being staff. Yeah. You just need that masseyeac.nz email. Yeah. Cool. So, I might as well wrap it up.
Oh, thanks, Matt. Cheers.
Welcome. Cheers.